Good evening, traders, and welcome to today's session. So my name is Edwin, and I'll be running you through today's session. So I hope you all had a very good weekend and that your trading week has begun well. So in our session today, we'll be focusing on one of the key data points in trading, which is purchasing managers index. So we shall start by looking at what it entails. Then we will jump into the charts and in the calendar as well, because today we had US PMI release at around 5 p.m. Just to get a sense of how this data is likely to affect the performance of the specific asset, in this case, the asset being the dollar. So purchasing managers index is a metric that tends to measure the prevailing direction of the economic trends in manufacturing and services sector. So it basically tries to gauge the market conditions in order for the decision makers to know whether the economy is expanding, whether it's stagnating, or whether it's likely to contract at present and in the near future. And this is from the perception of purchasing managers. So PMI basically aims to provide information about the current and future business conditions to company decision makers, mainly the managers, analysts, as well as investors. So it is a critical data. So it's mainly released on a monthly basis, and it carries out a survey of supply chain managers across 19 industries. So it is classified as a leading indicator of the overall economic activity. So when you talk about a leading indicator, this is a data point that tries to focus on the future economic activity. So the fact that it's a leading indicator, it then means that once you're able to project correctly how that data is likely to turn out, you can be able to take a position before that data is released, and by doing so, you'll be in a position to benefit as a trader. So it helps companies to get grasp of where the economy is headed. So it generally helps investors and traders and analysts to know how the general business environment is likely to be at present and in the near future. So the survey includes questions about business conditions and any changes, whether the conditions are improving or deteriorating, or whether indeed there are no changes at that point in time. So it basically tries to give indications in 5 major survey areas. And these areas are in regards to new orders from manufacturing companies, the stock levels that they might have, the production, or how they are going to, the data relating to the amount of goods or products that they are going to produce, supplier deliveries, and the employment or the number of people that might be needed to carry out production. So the headline of PMI ranges from 0 to 100. So when the figure is above 50, then that is interpreted to mean that the economy might be expanding. If it's close to 50 or at 50, then it means that no major changes are likely to be expected. But when it's below 50, then that might signify that there might be a contraction in the economy. So the further the data is apart from 50, then the greater the impact that is likely to happen, or it will tend to have a significant impact on the performance of the asset in question. So in our case, we are dealing with the dollar, because we had the data point for the US economy today. So we shall be looking at how the majors were performing and gold at the point of release. So how then is this data point calculated? So the formula is P1 times 1 plus P2 times 0.5, then you add P3 times 0, where P1 is the percentage of the answers which are said to record a potential improvement. P2 is a percentage of answers reported to record no change expected. And P3 is the percentage of answers reporting a deterioration or expectation of deterioration in the economy. So who then uses this data? So the first stakeholder is the management. So when it comes to the management, they basically try to use this data to make decisions in relation to production or future production. So based on how this data point turns out, if there's an expectation of a boom in the economy, then that might help management to increase the amount of goods or the amount of products that they are going to produce going forward. So they are therefore able to make goods or make products that are going to satisfy the demand of their clients. So as a result, purchasing managers index data serves as a guidance to help the management in planning for the purchases of raw materials as well. So depending on the number of goods that are to be produced for that particular month or that particular quarter, then they can be able to make necessary arrangements for the purchases of raw materials. Again, depending on the amount of goods that they have in their inventory, they can then be able to plan ahead in order to know the excess goods that they might need to produce for that particular month or for that particular quarter. Then the second stakeholders would be suppliers. So they serve a critical role in supplying parts of the end product to the manufacturer. So there are some companies which tend to buy complete parts, and they tend to assemble those parts to form a product. So a good example would be a company that manufactures cars. So they do not make components of a car from the scratch. They'd hire third parties to make those components, to then buy those components and assemble them to form a car or to produce a car. So when it comes to suppliers, they'd also find this data point quite useful in order to know the amount of components that they might need to supply the manufacturer. It therefore becomes a necessity for them to track purchasing managers' index number in order to estimate the number of components that they would project to sell for a particular month. Then when it comes to investors, investors tend to use a purchasing managers index as a leading indicator in making their investment decisions. So purchasing managers index tends to precede changes in the trend in major estimates of the economic activity and output, such as gross domestic product, industrial production, as well as employment. So it's a leading indicator to show the outcome of other matrices, like how many people are likely to be employed. So employment data is also quite useful, as well as the general production. So like the gross domestic product of the economy as well. So PMI would serve as a leading indicator for these matrices as well, which are very key for the economy. Then the other thing is that investors would be able to track changes in PMI data, and this can serve them to know how the future performance is likely to be, and that would enable them to make informed investment decisions as they trade or as they look to invest. So we're now going to jump into the economic calendar. So today we had, so this is forexfactory.com. So today at 5 p.m. we had the PMI data announcement for the US economy. So as you can see, it's classified as a high impact data point. So as we've stated, a reading above 50 is said to have a positive impact on the asset in question. So the expectation today was 47, an announcement of 47.2, but it turned out that there was marginal decline compared to the expectation. So the actual data turned out to be 46. So that being the case, I was trying to look at some of the US dollar pairs and gold as well, just to see how those pairs were performing at that point when that data was announced. So this was around 5 p.m. Kenyan time. So if we jump into the charts, I have a few dollar crosses. So the first one is Euro USD. So this is how the performance of the pair was. So there was a marginal rise on the pair in favor of Euro by around 23 pips. So for those traders who look for scalping opportunities, during this time, though there was no big move, you'd have had a chance to secure a few pips out of that move. So across the board, you'd be able to see that that decline of that data point caused the dollar to weaken generally across the board. If you look at the dollar against yen, price was able to decline by 43 pips. So this was a good opportunity to capitalize on USD JPY. If you look at GBP USD, we had a marginal rise. So all these charts are 1 minute charts. So within a few minutes, these were the kind of moves that the dollar pairs were making. So for GBP USD, the price rose by 27 pips within a span of 5 to 6 minutes. Then we have USD Swiss franc. There was a marginal drop. So we had 22 pips drop. Aussie dollar, price rose by 16 pips within 2 minutes, 2 to 3 minutes. Then when you look at New Zealand USD, within 5 minutes, price was able to rise by 17 pips. Then when you look at USD CAD, we equally had a marginal drop in favor of Canadian dollar by around 19 pips within a span of 5 to 6 minutes after the release of that data point. Then gold would have given you the best opportunity. So gold rose by 52 pips within a period of 3 minutes after the release of that data point. So that was the impact of the PMI today across dollar pairs, as we have seen. So basically, for those of you who trade on the basis of fundamentals, these are some of the data points that you should be trying to track in order to see whether they might portend any opportunities depending on the outcome. So it's always good to wait for the release. Then depending on the kind of volatility that is emanating from that announcement, then you'd be in a better position to gauge whether you can capitalize on that, or it would be best for you to forego the opportunity. So basically, that's it for today. So I don't know whether there are any questions. So as far as I can see, there seems to be no questions so far. So with that, we come to the end of today's session, and I look forward to seeing you again this coming Wednesday at 8 p.m. So enjoy the rest of your evening and happy trading.